good. It likely is right now. I guess I'll start with the DXY because that's what just came up first, all right? Because obviously, look, what do we see? Weekly candle closes in 8 minutes. And yeah, it looks pretty bearish just as an isolated candle. And what's really interesting is it seems to have found significant selling pressure at the 786 Fibonacci retracement, right? That's a weekly candle, right? Have we seen a weekly candle that ugly in this entire uptrend? I do not think so. Do I think it's a coincidence that the ugliest candle shows up right at the 786 Fibonacci retracement? Of course it's not a coincidence because nothing is a coincidence. And then when we look at the Dow Jones and we look at its weekly candle, we see a fully engulfed bullish candle really establishing a higher low here, potentially. I mean, at this point, it looks pretty likely that that's what we're starting to see, right? So now we see the higher high showing up here, and potentially we're going to see the higher low getting established. And if that leads to another higher high, well, that's what you call an uptrend, kid, okay? Really basic, honestly. And if we look at the DXY, one other thing that's kind of interesting to notice here is look at that moving average. What do we see when we look really closely at the moving average right here? If you look really closely there, you see it's starting to turn, right? Starting to turn. And when you think about how high this thing is off the moving average, well, that tells us that this giant move in the DXY is at least due for a breather here, right? And since we're looking at the weekly chart here, and if you look at this, like, do you really see any waves in this? I mean, can you break it down in Elliott waves is the main question. And honestly, on this weekly chart, I find that pretty difficult to do. I don't really see clear Elliott waves on this. So what I see instead is potentially just a wave one here, right? And we've talked about that the US dollar is in a very bullish sequence right now. It broke out of this major trend line, which goes back. Just take a look. This is a major breakout here. And it's likely in a bullish sequence, right? If we look at, we had this downtrend, you know, high, then a lower high, followed by a lower low, right? And then you break out of the trend line. You are potentially looking at a pretty bullish sequence on the US dollar. Long term, not good for equities. Long term, not good for cryptos. But short term, if we look at this, even on the monthly chart, and you can see that moving average turning down even more on the monthly chart, we see what is likely a wave one in a bullish sequence, right? So if we're looking where there's a potential level that the US dollar could reverse down to, which would be all bull movements in the stock market, in the crypto market, where would we see a likely pullback to? Well, we can pull up our inverse Fibonacci's and see if we can get some corroboration for the inverse Fibonacci against the standard Fibonacci. And right off the bat, you see a very clear one, right? You see the inverse 702 exactly corroborated with the standard 0.5 Fibonacci level. And that looks like a wave one. I mean, that's what a wave one is likely to pull back to. If we look at the stock market, where did the wave one pull back to here? Or rather, where did the wave two pull back to? It pulled back to literally an inverse 702, right? Like something there, right? And if we're looking at all of these, you know, inversion corroboration things, right? Then maybe the stock market is telling us where the wave one in the DXY is likely to pull back to. That's a significant drop in the DXY. And what does that imply? That implies bullishness for equities and stock markets here to come. And when we just look at the basic uptrend that we see developing here, and we have the follow through where we see a higher low, we see a higher high, it's pretty optimistic at this point, you know? I mean, we're so early in this, and it does feel like you got to be very cautious, right? Because another thing we can consider here is that this is actually potentially an inverse ABC correction. Now, what do I mean by that? If I invert the scale, if we look at this as a local high, then we could potentially look at this as an inverse ABC correction here before significant downside comes back to the market. And this is now like I'm being extra cautious. I'm being like bearish is what I'm being right here, right? This is now my bearish take on this, right? You have that C heart wrencher coming in right here. Where could that go to? This is probably like a 702 retracement or higher than that, something like that, some kind of retracement level on the inverse, right? But then if we flip this back over, we see, that ABC correction could come really close to that all-time high or even exceed the all-time high. That's totally fair game. It's allowed to do that and still be an ABC correction. So think about that. You could have a bearish sequence setting up that still sets a new all-time high in the stock market, and this B to C move is like psycho bullishness. But then what's it followed by? Well, it's followed by a giant crash, essentially. Potentially a major significant crash in equities and cryptos. But this leg of the market here could be where you're going to be cashing in majorly at this point. If you've been waiting, if you've been patiently, if you've been buying in these scary moments back in June 16th, I remember that was horrifying, but that was a moment where we really needed to be buying. And now we just need to be defensive because you are in an uptrend. We have to be defensive about where that uptrend is going to end. And we're looking at the US dollar to say that, well, the US dollar is bullish, right? Overall, it's bullish. It might be reversing finally. It might be finally taking a breather here. That's what the moving average is telling us. But ultimately, it's probably in a bullish sequence that's going to keep going. And let's just look what that could look like on a really basic Elliott wave level. It's just something like, there's your wave 1. Maybe wave 2 comes down to here. And then, wave 3, wave 4, so on. Who even knows? Who even cares? I don't even think that far out. But either way, likely this thing is heading up, around here ultimately, right? Especially if we're kind of anticipating something relatively horrifying to occur in the equities markets and the cryptos markets, then yeah, the US dollar is likely to make it up to this 1.618. But in these downswings, we're going to see upside in the equities and cryptos. And it looks like we could be finally, I say that with a lot of caution, but we could be initiating that wave 2 move in the US dollar. And that's going to give us that potentially significant upside for an extended period of time in the stock market. We don't really know how long. We're going to be defensive as soon as we get into new all-time highs. I mean, that's what I'm taking major profits here. That's really what I'm looking for, is I'm looking for that sequence where you just poke the tiniest little bit above the all-time high, right? That's kind of the defensive sequence that we had. We saw that in Bitcoin where we had a new all-time high, but it was just ever so slightly above the previous all-time high. We didn't go on this major psycho bull run, right? We just had like a tiny little new all-time high. I would wager with literal money that potentially is what's setting up in the Dow Jones, because there is a lot of macro factors that don't look great, but those aren't right here and right now. The near-term factors are actually very bullish, right? We have interest rates coming up. I've talked a million times about how when the interest rates are coming up, that historically has caused bull movements in the stock market. I just think that interest rates will actually come down at some point, probably sooner than people think. And if we look at history, which we've done so many times on this channel, we've looked at the Fed funds rate against the U.S. stock market, and we've looked at when they start to turn the Fed funds rate down, that's when the stock market turns down, right? So that's what I'm anticipating. I think we're in like a straight line up. Let's just take a quick look at the good old Fed's fund rate, because I believe we're still in a straight line to the upside at this point. And if we're still in a straight line to the upside at this point, yeah, look how it's slightly starting to turn, right? Slightly starting to turn. Is it a coincidence that it's slightly starting to turn when it's reaching that previous high? No, nothing's a coincidence, right? So we could make the argument that this thing eventually is going to reverse the downside, and it's probably going to reverse the downside before the stock market reverses to the downside. That's going to be my major signal. When I see the Fed funds rate heading to the downside, I'm going to start selling basically everything. And at this point, I'm mostly thinking of like a short-term swing trade setup, like a swing trade that's going to take me from basically right now through to the end of the year-ish, right? And then if we consider historically what happens during midterm election years, they like to make the stock market do bullish things coming into midterm elections because that makes the incumbent look good, right? So that's another sort of like self-fulfilling macro prophecy bull factor. And if we're talking about self-fulfilling prophecies like the September sell-off that we historically see year after year after year, then that could imply that this next week coming up in September here is actually really bullish, so that we make a higher low when that sell-off occurs. Something as simple as like boom, like literally like something like that, right? And then you're coming to the end of the month. Well, I overshot that a little bit, but something like that, right? To set up a higher low and a higher high situation right here. And that would make a whole lot of sense because we have to account for the self-fulfilling prophecy of the September sell-off, right? That doesn't mean that we don't have a bullish October and a bullish November. And I actually think we likely will have a bullish October and a bullish November for the simple fact that the midterm elections are coming up and they're going to use their, money printing and all of their techniques that they use to pump these markets and to make these markets look really good coming into that midterm election. After that's over, all bets are off. That's when my caution signals are going to be back up. But at this point, things do look pretty good. Bitcoin does look pretty good. Look at that weekly candle that's setting up here. And when we take a look at other altcoins, we're starting to see wave 1 and wave 2 completed here, right? Like something like TRB, right? You see wave 1, a wave 2 very potentially completed, potentially, really hard to say. One thing you want to be really considerate of in something like this situation is when TRB comes up into retracement levels, well, you're going to have a whole lot of pressure right here, right? If the stock market is bullish, though, then you're not really going to have to worry about a rejection at this 702. You're going to probably just continue in a wave 3 right here, right? So you have that wave 1, you have wave 2 down. This is likely a wave 3 if we're coming into that bullish cycle here, which, like I just said, for many reasons, I think is pretty likely. Historic reasons, a lot of historic precedent to expect that October and November could be very bullish coming into the midterm elections here. And obviously that means that setups that look like they're in 5-wave impulse moves are very likely in 5-wave impulse moves, right? They're not in ABC corrections, right? So I'm just to do like a basic projection on what TRB might be doing right now. Something like this, right? Really, really basic Elliott wave impulses, right? Impulses. So an impulse is the 5-wave move, right? Literally like this kind of stuff. Oh, we got a nice little confluence here around this 702 before you're going to get major sell pressure. Could make it up to the 786, which is, this full 4.236 extension on this local Fibonacci structure. Something like this. It could literally be setting up for TRB in the relatively near future. Where does that end? Right on schedule, right? Right on schedule for the midterm election before you're going to have that major selling pressure, right? So that's what I'm saying, where if it looks like you have a wave 1 and potentially a wave 2 completed, that's what all of the markets are starting to show. We have reason to believe that this is the beginning of a 5-wave impulse as opposed to another quote-unquote bear market rally, right? So that's really what I'm getting when I'm looking at the Dow Jones. I'm getting like I see a very clear bullish structure that's set up here on the most basic level. And the thing is, keeping it basic is really the key thing that we want to do here. Like, forget about the ABC correction, forget about the Fibonacci's, forget about everything, and just look at, you had that low, and then you have a really strong follow-through off of a higher low, and you also have a higher high. So you really have the makings of an uptrend at this point. And when you consider that this market is in a major uptrend, what we call a secular uptrend, then the whole thing is really more likely to continue up than it is to continue down. And when you look at the pullback here, it's like, wasn't really even that big of a pullback. And where did it find support? It found support right where the COVID crash happened, right? And then look what happened here, right? Look how nasty this is. Like, we're coming into like just major volatile market phase here, right? And if you have a recovery off of something like this, then it's no stretch of the imagination to think that you're going to have a recovery coming off of this. You're getting like a trend that everyone can read, a kindergartner can read. this uptrend, higher high, higher low, right? That's really basic. So hopefully we're going to get some follow through. I mean, I would be cautious about what happens when you come up to this 702 level. You know, if this becomes a rejection, it doesn't necessarily mean that this uptrend is a failure. That doesn't mean that necessarily. But if I'm cautious, depending on where other assets are, I'm going to be selling certain assets when the Dow Jones is at this local 702. That means, like, depending on where, say, Filecoin is, where TRB is, I'll be selling those things if I'm well into profit at that point and the Dow Jones is coming up to a potential reversal point, right? If I'm being more bearish than bullish. But that's now a little bit overcomplicating the whole thing. If I'm just keeping it simple, I'm just looking at, it's more likely that the next thing we see here is a higher high. That's what we're probably more likely to see. And then that higher high could lead to some significant selling pressure. And if we look at just this more macro structure here, and you have some confluence here for potential selling pressure at the 0.5 level, but really more likely we're going to be seeing the sell pressure come in at the 702, and that just happens to be another higher high relative to this, following this lower low, which came in at a very predictable level too at the 236. So there's a lot of complex, nuanced bullishness, but also a lot of basic bullishness. So that's good. This is definitely a time to be potentially entering some long positions with stop losses set at reasonable places, but this could be a time to make good money coming up here. We could have a really good money season coming up here. And the prophecy of the altcoin season is never been more likely to be fulfilled at this point where we are right now. In just retracements alone, we're not even necessarily, I mean, I'm not banking on these things to make new all-time highs. I'm just looking for retracements. Like, yeah, I'm happy with a 10x at the 236 on Filecoin. Absolutely, I'm happy about that. And who knows what's going to go on. I'm sure going to leave stuff on the table for these other levels. But it's just, you want to be defensive at this point because the interest rates are getting to that point where they could be turning down. They could be giving us the indication that markets are going to sell off after those interest rates turn down. And I know if you're watching this for the first time, that makes no sense to you because you've been brainwashed to think that markets only rise on interest rates going lower. But we've already proven on this channel time and time again, go back and watch previous videos, that the fact is when interest rates are rising, markets are rising. It's really simple. So we have that straight line to the upside on the interest rates that's starting to turn, right? Doesn't mean this turn isn't going to take a long time. Doesn't mean we might not even break above this high. We could easily we probably will break above this high, but we could start to see the beginning of that rounding top taking shape. And once this thing starts to round and it starts to come down a little bit, the stock market can still run. The cryptos can still run at that point. They can absolutely keep running after this thing starts to turn a corner. But that is the cue of like, okay, time to get out here. Like the interest rates historically have told us that when they start to turn down, the next thing that turns down is the stock market. That's exactly what we see here coming into the March 2020 crash, right? Interest rates start to turn down in June of 2019. That anticipated a major sell-off in these markets. Look at this, February 2020, March 2020. That's when this happened. So when these things start to turn down, that's when the stock market and the cryptos start to turn down as well. So that's where I'm getting caution. That's my caution signal that this was a straight line. This is a straight freaking line. And I'm like, buy. But now this straight line is starting to turn a little bit. So that could mean we're coming to that final blow-off move here in equities and cryptos, which makes complete sense considering everything that we've talked about on this channel for literally like 18 months at this point. So that's good, but the caution is that, yeah, this thing's starting to potentially turn. If we just look at it on a really basic level, this line is not as steep as it was previously. So that's why I'm sounding a little bit cautious here, because it's happening while cryptos are still relatively low, right? So if I'm optimistic on cryptos, well, then I'm looking for a very quick and impulsive move that's coming. And that's typically how these things go in the retracements, right? They happen really, really, really quickly. Like you can't anticipate them. You're going to wake up one morning and you're going to see a giant candle and you'll be like, oh, wow, that happened in 24 hours. And then you sell. That's it. It's literally that quickly. Like you wait all this time just for a quick impulsive move. And those impulsive moves typically come before major crashes in the market, right? So that's something to keep in mind. And look at this. Bitcoin is really doing pretty well right now on this weekly candle. And the daily close is coming really quickly. It's going to be a big, big daily close here on Bitcoin, and that's really good with some good volume here. So that's nice. I like the close above my trend line here that I've got drawn. And hopefully we see some follow through here. Hopefully we see some follow through. And we can set up a situation where we bust out of this trading range here only to find support on it later, right? When we get that September sell-off, we find support on this, potentially on this area, and we establish an uptrend in earnest, right? Bitcoin, I mean, technically, if you go back to, back to that major sell-off that occurred in June, you sort of do have the makings of an uptrend, right? You have the low, and then you have the high relative to that low, and you have the higher low now. I think a higher high is absolutely in the cards here. Hopefully that higher high is high enough where you find support back on this August 13th high, right? And establish that uptrend in earnest, which is going to give us that green light to see a lot of those altcoins flourish, right? So that's the setup, dude. That's what's good. I mean, this is all right in front of your face. We're just looking at higher highs and higher lows. There's really nothing complicated about this. And when you look at the basic level here, I mean, it's in plain sight. You can see it. So, right? All right. So, good, dude.